Hi, my name is Braden Milner and I'm a Southwest Florida realtor with Florida Future Realty. Today, I'm here to help first-time homebuyers understand the steps that they'll need to take in order to get ready to purchase their first home. In this video, we'll cover why you should own a home, the FHA program, how to use a mortgage calculator to determine a monthly payment you can afford, and how to save money for a down payment. One of the biggest advantages of owning a home is that you have the potential to build equity over time. Whereas when you rent, you're simply just paying someone else's mortgage. Renting may seem easier because you don't have to worry about maintenance and repairs, but ultimately you're just paying off someone else's property and seeing no return on your investment. Although typically single-family home ownership is not seen as an investment, home prices have historically risen over time. If you own a home for several years and then sell it, you may recoup a significant portion of the money that you paid in and even potentially make a profit. For example, if you purchased a home worth $400,000 in today's market with an interest rate of 6.7%, your monthly payment will be right around $2,500. Now let's assume an annual increase in property value on average of 5%. At the end of 10 years, your property will be worth right around $650,000. After those 10 years, you would have a remaining balance of right around $335,000 on the home. This would net you a gross profit of approximately $315,000. However, considering the $245,000 of interest that you've paid out over the 10 years of owning the home, your real profit would only be around $70,000. Still, even with this interest paid out, you're still exiting the position $70,000 net positive and you had a place to live for 10 years. Now let's consider you simply rented the home at the same $2,500 monthly payment over the next 10 years. You would end up paying out $300,000 in total or $30,000 per year. You will receive none of this money back when you leave the property as you never own the asset and were simply just paying to stay there. In the first scenario, you would have gained about $70,000 in net worth over the 10 years of owning your home. In the second scenario, you would have paid out around $300,000 just to simply rent the property from somebody else. Additionally, another great aspect of home ownership is the potential to lower your monthly payments through refinancing. If current mortgage rates end up dropping at some point in the future, you're able to refinance the home at those lower rates. This will in turn lower your monthly payment on the home as you're going to be paying the bank less interest. These benefits illustrate why owning a home can be a better financial decision than renting in the long run. Although interest rates are currently on the rise, they're leveling out to pre-pandemic levels, and the stability and long-term benefit that comes with homeownership is definitely worth considering. Now, you're probably wondering how you can stop paying your landlord and start paying yourself by building equity in your home. To do this, we need to determine how much of a home that you can afford. This will be found in the form of a monthly payment. This can be determined using a mortgage calculator. I have a free tool linked on my website in the description below. You can enter the current interest rates, home price, and down payment amount to give you a monthly payment. You want to ensure that this number is something comparable to your current rent spend to ensure that you can afford the payment and factor it into your monthly budget. This monthly payment amount is going to determine how much of a home you can afford. For example, if you have a $1,500 rent payment and would like the same mortgage payment, the max home that you could afford with today's interest rates will be right around $185,000. Now keep in mind, this monthly payment amount is just a rough estimate and you should always consult with a professional to get a more accurate assessment of what you can afford. Once you know how much home you can afford, the next step is to prepare for the home purchase. Being a first-time home buyer, you may not have substantial money saved up for a large down payment on a home. This is where the FHA program comes in. The FHA program is a government-insured mortgage program that makes it easier for first-time home buyers to qualify for a mortgage. One of the key benefits of the FHA program is that it allows for a down payment of as little as 3.5% as opposed to the typical 10 to 20% down payment required. This makes it possible for first-time homebuyers to purchase a home with a smaller investment up front. Now, let's get you prepared to save that down payment. Ensuring that you have enough money for a down payment is a crucial step in preparing to purchase your first home. You will determine your down payment amount based off of the mortgage calculator in our previous step. Utilizing the FHA program, this will be about 3.5% of the purchase price. Then, you're going to take this number and divide it by the amount of months that you will need to purchase the home. This will give you the amount of money that you'll need to save each month in order to have enough money for the down payment when you do purchase the home. Then, we need to budget accordingly. It's recommended to live on a strict budget during this time. Do not impulse buy and ensure that you budget out your meals, entertainment, and shopping expenses, as well as considering the down payment amount. This will be a difficult few months, but the long-term benefit is well worth the short-term sacrifice. Also, be sure to consider potential closing costs and any other expenses that may be due at closing. Now, you're ready to get started on the path to homeownership. If you have any further questions, I encourage you to contact me for a free consultation. I'd be happy to work with you to create a personalized plan to get you ready to purchase your first home within the next 6 months to a year. Thank you for watching, and I look forward to speaking with you soon. I'll see you all in the next video.